I want to pivot this thing to talk a little bit about the mechanics of how the ETF actually works, because I know that's something you're pretty familiar with. Just some simple things like, they probably do it a little differently with each one, but do they just lump buy once a day? Do they buy throughout the day? How does an OTC desk work? Give us a little bit of background about how these things actually mechanically work.
Yeah, so the one that I feel like I can speak to very well because this was my world in traditional finance is the concept of OTC desks, which for anyone who's unfamiliar is over the counter. So this is like the opposite of a centralized exchange where everyone who trades on the exchange has an account at the exchange. There's an order book where the exchange is matching up buyers and sellers. OTC over the counter is this more fragmented market. There are these players who exist to say, we're just going to be a market maker in the general sense of the word. We are going to connect buyers and sellers, a broker, if you will. I'll talk mostly about the OTC desk side of things, and I'll just make as a general comment. I would say this is one of those things where it's important to keep in mind that just because someone worked in traditional finance definitely does not mean that they understand all aspects of finance. The analogy I love to give is that someone who works in medicine, let's say they are an oral surgeon, they may know everything about oral surgery. It doesn't mean that if you ask them about something else medical or health related, that they're going to have a good answer for you. So, keep that in mind. But I can talk a lot about OTC desks. About the mechanics of the ETF, I have a little bit of an understanding and how it fits into OTC desks, but I just want to underscore that my forte will be OTC desks.
Okay.
Because I worked in a fixed income portfolio management investment team, and fixed income just means bonds. So corporate bonds, treasuries, mortgage backed, municipals, emerging market debt, etc. Those all trade on an OTC basis. You're not trading those on an exchange. So if we wanted to go buy a bunch of some corporate bond, we go to we would call it the sell side, so the other part of Wall Street. You go to the broker dealers and say, hey, I want to buy 10 million worth of this company's corporate bonds. And this is where it gets interesting because I called an OTC desk a broker, but there are lots of different types of brokers out there. A pure broker would be like a real estate broker. And pure broker is just kind of something I made up. I think that's a good way to describe them. But why I call them a pure broker is that they're not buying your house from you, taking it into their name and saying, let me go find a seller for this house and I'll eat all the market and price risk. They are truly matching a buyer and a seller. They earn a fee. That's
so it's almost like you could describe it as consignment.
Yeah. They're just matching up buyers and sellers. But it's confusing because we would call that person a broker, but we would also call a broker on Wall Street. We call them a broker as well. But in financial markets, these people are not matching up a buyer with a seller for every single trade. They are taking some market risk, some price risk. They're holding some inventory. They don't want to take massive bets on those things because if they are, then you're venturing away from being a broker and now you're more like a hedge fund, right? Like you don't want to buy a bunch of Bitcoin from this guy over here, hold it on your books, making a bet that the price is going to go up in the next, few hours or days or whatever. Because if you're wrong, then like you're just losing a ton of money. Now you're like this quasi hedge fund, quasi broker. So you don't want to take too big of bets, but the reality is that markets would be very slow. They would grind to a halt. If every time someone came to you with an order to buy, that you had to go find a seller for that exact amount and get them to agree on price. And so the reality is
just a quick question. I don't want to divert us too much into the weeds here, but that's also where options markets come in, right? So let's say you're holding 10,000 Bitcoin and you can't really take the price risk. You could take the other side in the options market with it's basically an insurance policy to protect your ass in case it goes down 30% overnight or something.
Yep. And that's why this is a full-time job. Like being an OTC desk is managing your exposure, whether it's, you're getting close to matching up buyers and sellers and you're like, high degree of confidence that this guy on the top of my list is going to want to buy this Bitcoin I just bought from this other person at approximately this price because he gave me like indicative orders of where he's looking to trade. That's one way you would manage your exposure. Or maybe you just, using options and derivatives, you say, okay, now I'm hedged and I don't really care who the next buyer is because I've hedged my exposure. So it's a very complicated thing, but that's what brokers and OTC desks are doing. And then just one comment I would make about the fact that there was this narrative kind of going around like OTC desks are running out of Bitcoin. The TLDR view that I have there is that I don't think there's a ton of signal in that type of a statement, even if it's true. And for a few reasons. One, I would say is that as far as I know, Bitcoin OTC desks, like they're not heavily regulated. So the data on that, I think, should be a little suspect. It's like, how exactly did you calculate this real-time data on every Bitcoin OTC desk in the world? You just compare that to like the world I used to live in. These are US based financial institutions that heavily regulated, and they have to report their inventories. So we could get a report on, we called it dealer inventories. And it'd be like, this is, what they have in bonds. You could trust that data, but that was from a heavily regulated industry. And even then, it wasn't like you could just look at the inventories and be like, oh, dealer inventories are building up. That means the prices of bonds are going to go down. Or dealer inventories are shrinking. That means the price of bonds is going to go up. Like it's just not that causal. So the takeaway from me would be, unless someone has like a really compelling case of what's going on at OTC desks, if you're a Bitcoiner out there, I would not think you can like take away some big signal if you see a tweet that says the Bitcoin's going down on OTC desks.
That's helpful. That's a helpful anecdote for sure, because I think that narrative, people love to sling that. It's come out at numerous junctures, and I've certainly heard it a lot recently.
Oh, one question before we move on from these OTC desks. So this is something I think I know, but I don't 100% know if this is true. The reason they exist is generally because a large buyer, like say an ETF, wants to come into the market and they want to procure 5,000 Bitcoin or something. But if they do that in, say, Coinbase, there's going to be massive slippage. They're going to create, this price movement that's going to keep them from buying at the price they wanted. Is the primary reason for these things to exist to kind of protect people from price slippage when they're buying a massive amount?
I think that's part of it. Yeah, it's a little bit more if you put an order for a massive amount on an exchange, and then that's just like in the order book.
Yeah.
That you don't really want that as a market participant. So I think that's part of it. And then I think part of it is just like how markets kind of came to be, whatever the market is. So, and it's the fact that it's like this globally distributed, fragmented market. Like you could have an OTC desk that is based somewhere else in the world. Everybody can communicate fairly easily now. I think that's just like a more natural way for a market to develop around Bitcoin rather than having like the New York Stock Exchange and you convince everyone like, hey, if you want to trade your Bitcoin, like you got to do it via the New York Stock Exchange. Just given Bitcoin is this globally used fungible asset, an OTC desk kind of makes more sense that it would develop that way.